Hello, everyone. Let's start our today's discussion. I hope you all remember that in previous class we completed our discussion on question number 2 of specimen exam of advanced audit and assurance. We are having series of past paper discussion sessions on advanced audit and assurance exam. These past paper discussion sessions give a review of different topics and also give an understanding that how we have to deal with a complete exam paper. Today we are moving towards question number 3, which is a 25 marks question. In this question, 20 marks are relating to auditing knowledge and 5 marks are relating to professional skills. I want you all to listen to me with patience and concentration while we draft the answer of this question so that you all can understand that how you have to attempt the auditing marks in a professional manner so that you people can target complete 25 marks. Now we'll first read the entire question, we will identify the pointers, and then we will draft the answer together. Okay, so let's start. It is 1st July 2005. You are the manager responsible for the audit of Myron Company, a listed company, and you are in the process of completing the audit of the financial statements for the year ended 31st March 2005. The auditor's report is due to be signed in the next few weeks. The company's principal operating activity is the publication of trade and scientific journals. So we are reading an introduction of the question, and it shows that we are currently in completion stage of the audit because it is written that auditor's report is due to be signed in the next few weeks. The draft financial statement recognized revenue of $108 million. In 2004, it was $102 million. Profit before tax of $9.3 million. In the previous year, it was $8.2 million, and total assets of $150 million. Materiality has been set at $0.5 million. So the question has already given us the materiality level which we have to use throughout the question. The following exhibits available on the left-hand side of the screen provide information relevant to the question. Exhibit 1, completion matters. Details regarding an issue you have discovered during your review of the audit working papers. And Exhibit 2 is on the chairman's statement. Management has provided you with an extract from the chairman's statement, which they intend to publish in the annual report. The information should be used to answer the question requirement within the response option provided. So this was an introduction of the question, which tells us that we are currently in the completion stage of the audit because the auditor's report is due to be signed. Then we are provided with the financial data, we are provided with the materiality level and the 2 exhibits information. Now let's read each of the exhibit. We'll try and identify maximum of the information so that when we draft the answer, we can relate our answer. Okay, now let's read the first exhibit, completion matters. I always say to my students that when you are reading the question for the first time, always read it with patience and concentration. Don't rush while reading the question for the first time. Okay, try and identify the data. We'll look at it in detail when we'll draft the answer. You are in the process of reviewing the audit working papers and have identified the following potential issue. Sale of division. Myron Company is at the advanced stage of negotiations to sell its scientific publishing division to a competitor. This division contributed revenue of $13 million and profit before tax of $1.4 million during the year to 31st March 2005. So Myron company is in a process to sell one of its business division. Okay. Now your mind should give you alert about IFRS 5, held for sale and discontinued operations. Sir, how did your mind detected this concept? See, this division is contributing revenue and profit before tax, which means that it was a separate line of business which we are selling. Okay. The draft sale agreement, which is due to be finalized by 1st August 2005, shows an agreed sale price after cost of disposal of $42 million. The division is a separate cash generating unit of Myron Company. None of the assets of the division are held under a revaluation policy, and depreciation is charged on a straight line basis over the determined useful life of the assets. The finance director of Myron Company has not made any disclosures with respect to the upcoming sale in the financial statement for the year ended 31st March 2005, as he considers it to be the part of the next accounting year transaction. See, this is wrong. As per IFRS 5, if the conditions of held for sale are satisfied on the year end, then you have to make an adjustment. What are the conditions of IFRS 5 held for sale? I hope you all remember that the sale is probable to be done in the next 12 months. So it is clearly written that the draft sale agreement is to be finalized in the next year. The management is committed to sell it. Active location of buyer is being done. So yes, the deal is nearly done with the competitor. So active location of buyer is being done. The asset is in saleable condition. Okay. So what you need to understand is that if the conditions of IFRS 5 held for sale are satisfied, we need to make an adjustment, despite that the transaction will happen in the next year. Because the name of the standard is held for sale. It is not actually sold. It is held for sale. So if at the year end it is held for sale, we have to make the adjustment. However, the division has been written down from its current carrying amount of $45 million to its estimated value in use of $41 million in the financial statement for the year ended 31st March 2005. This is also wrong. As per IFRS 5, held for sale, when an asset is classified as held for sale, we have to ignore value in use. We have to ignore value in use. Okay, we have to write down it to sale proceed after cost of disposal. So it should have been written down to $42 million rather than $41 million. Okay, so sale of division. It is a simple concept of IFRS 5, held for sale and discontinued operations. Okay, let's read further. Exhibit 2, Chairman Statement. Okay, let's look at it. As part of your review of Myron Company, you have also been presented with an extract from the draft chairman's statement, which will be published in the annual report alongside the financial statements for the year. Extract from the chairman's statement. The company results for the year are extremely positive. Our year-on-year revenue growth is 5.9%, and profit growth is even stronger at 13.4%. See, you all know that chairman's statement is other information. Auditor has to make sure that these other informations are consistent with the financial statement. I will repeat it again. See, the auditor do not have to express opinion on the chairman's statement. Okay, chairman's statement is not financial statement, but the auditor has to make sure that this chairman's statement is consistent with the financial statements. Okay, consistent means that there shouldn't be any conflicting information. All our revenue streams have performed well. especially the scientific publishing division. And we are looking forward to exciting and sustained growth levels again next year. So you can say that apparently the chairman's statement is misleading. Why is it misleading? Because the scientific publishing division is to be sold. We have just read it that the company is selling the scientific publishing division. So now saying that the level of growth will be sustained, it is misleading information. It should be made clear here that, okay, the scientific division is to be sold. So sustained growth will be relating to the other division only. As you can see from our auditor's report, the auditors agree that our results are strong and a sound basis for taking the company to even greater places next year. See, this is also wrong. The auditor report do not tell these type of thing. Auditor report only tells that, okay, the financial statements are true and fair. We don't comment that whether the results are strong or there are sound basis for continued growth. We audit the past, not the future. We have also made significant progress with our social and environmental aims of reducing our carbon footprint and encouraging to reuse and recycle across our divisions. We are proud to announce that we have now moved all our printed products to recycled paper. So this is also one of the claims made in the chairman's statement. We need to verify that whether it is true or not. To help with your review of the information, you have also the following analysis of the results for the year. Year ended 31st March 2005, other divisions and scientific publishing division. We are provided with revenue 95 million and 13 million. The total revenue is 108 million. In the previous year, the revenue of other division was 93 million. Scientific division reported revenue of 9 million. So the total revenue was 102 million. Then profit before tax, 7.9 million, 1.4 million from scientific division, total PBT. So this is the financial data. We need to look at it, that whether the growth numbers which have been reported in the chairman's statement are right ones or not. A note from the audit supervisor state that at least 3 of the publications of Myron Company cells are not prepared on recycled paper. So the claim of the chairman that all our printed products have been shifted to recycled paper is not true, because the supervisor stated that at least 3 of the publications are still not on the recycled paper. Okay, so these were the 2 exhibits. Now let's look at the requirements. Let's look at them. Using the information contained in Exhibit 1. Okay, Part A is only related to Exhibit 1. Comment on the completion matters to be considered in relation to the issues described, and recommend the further actions necessary before the auditor's report can be signed. So matters to be considered and actions to be taken. Evaluate the implications for the auditor's report if no adjustments are made to the financial statement. So this Part A is related to sale of the division, 10 marks. Then Part B, using information contained in Exhibit 2, describe the auditor's responsibilities in relation to other information with audited financial statement, and evaluate the matters arising from the extract of the chairman's statement. 5 marks, what are our responsibilities and the issues in the chairman's statement. Assuming that no changes are made to the chairman's statement, evaluate the implications for completion of the audit and auditor's report. So 5, 5, and 10. 20 marks are those which you have to attempt. So what about the 5 professional marks? You all know that professional skill marks are not a separate requirement. You just answer the auditing requirements. What you need to make sure is that while you develop the answer, you make sure that your answer is developed in a professional manner. What is professional manner? Relate to the scenario well, do good analysis, evaluation, skepticism if there is any data which needs to be questioned, make a good judgment. Judgment means that where you feel that, okay, this is misstated, so you should write that down. Okay, 5 marks. So these professional skills are good or bad for our paper? It's a very good thing. See, you are only attempting 20 marks and you are getting 5 additional marks. And these professional skills do not require to do something new. This is what we always try to make sure when we try and develop the auditing answers. We always try and apply to the scenario. We always try and relate it to the scenario. Okay, so now we are doing this part A first, okay, which is a 10 marks requirement. I want you all to concentrate on it while I draft the answer. Okay, the name of question is Myron Company. This is our requirement. Okay. Using the information in Exhibit 1, comment on the completion matters to be considered and actions to be taken, and evaluate the implications for the auditor's report. Okay, so first of all, let's comment on matters to be considered. See, in question number 2 and 3, there are no marks relating to communication. Please listen to me. In question number 2 and 3, there are no marks relating to communication. So if you don't give headings, it is not an issue. Okay. In question number 1, there are professional skill marks. You all know that in question number 1, there were 4 professional skill marks which relate specifically to communication. So in question number 1, giving headings and subheadings is very important. In question number 2 and 3, if you give headings and subheadings, that is good. But if you don't give those headings and subheadings, then it is not an issue. Just making it clear so that the students have a clarity. Now, matters to be considered, actions to be taken, impact on the auditor report. You all know that in these type of question, we consider 1 mark for each valid comment. 1 mark for each valid comment. So this 1 mark is for auditing. What about the professional skill marks? I have told you this multiple times that professional skill marks are not a separate requirement. You just answer your auditing head. While answering the auditing head, while answering the auditing requirements, make sure that you attempt in a professional manner. You apply it well, make good arguments, and you will get those 5 marks for free. Okay, so 1 mark for each comment. First of all, we will refer the matters to be considered. Then we will move towards the further actions which has to be taken. And then we will look at the implications for the auditor's report. So it's a 10 marks requirement, which means that we have to draft 10 points. Okay, matters to be considered. So now we will refer Exhibit 1 again because Part A has to be attempted through Exhibit 1. Okay, we have read this exhibit earlier also, but now we will refer it in more detail so that we can identify the issues which have to be included in our answer. You are in process of reviewing the audit working papers and have identified the following potential issue: sale of division. Myron Company is at the advanced stage of negotiations to sell its scientific publishing division to a competitor. This division contributed revenue of $13 million and profit before tax of $1.4 million during the year to 31st March 2005. The draft sale agreement, which is due to be finalized by 1st August 2005, shows an agreed sale price after cost of disposal of $42 million. We have already identified this issue when we were reading this exhibit earlier, that despite the actual sale will happen after the year end, but since at the year end, the negotiations were in place, the management was committed to do the sale. So IFRS 5 held for sale and discontinued operations will be applicable on it. The division is a separate cash generating unit of Myron Company. None of the assets of the division are held under revaluation policy, and depreciation is charged on straight line basis over the determined useful life of the assets. Now, once the assets get classified to held for sale category, the depreciation should stop from that date. Okay? The finance director of Myron Company has not made any disclosures with respect to the upcoming sale in the financial statements for the year ended 31st March 2005, as he considers it to be part of next year's accounting transaction. See, despite that actual sale will happen in the next year, but since at the year end, it is highly probable that sale will happen in next 12 months. So as per IFRS 5, held for sale, we have to classify it separately. Okay. And since it is a complete business operation also, so as per discontinued operation rules, we have to show its profit also as a separate line item in the income statement. However, the division has been written down from its current carrying amount of $45 million to its estimated value in use of $41 million. This is also wrong. Once IFRS 5 held for sale becomes applicable, then you don't look at value in use. At that time, you start looking at sale price after cost of disposal, which is $42 million in the financial statement for the year ended 31st March 2005. Now, before we start looking into matters to be considered in detail, first of all, we will evaluate the materiality. Okay, you all know that in matters to consider answer, first of all, we comment on materiality of the issue. Okay, scientific publishing division generated revenue of how much? Generated revenue of $13 million and profit before tax of $1.4 million. Generated revenue of $13 million and profit before tax of $1.4 million during the year ended 31st March 20x5, which represents, okay, revenue is 13 million and profit before tax is 1.4 million, which represents how much? If you remember on the introduction screen, we were provided with the total revenue and profit before tax figures. The total revenue is $108 million and profit before tax is $9.3 million. So 13 million divided by 108 million. So it's 12%. Represents 12% of total revenue, and 1.4 million is the profit before tax of this segment. The total profit before tax is 9.3 million. 1.4 divided by 9.3, 15%. Represents 12% of total revenue and 15% of total profit before tax, respectively. Okay, it is material to financial statements. Okay, see, you all know that for revenue, the materiality threshold is from 0.5% to 1%. And for profit before tax, it is 5% to 10%. Okay, further, assets recognized in relation to scientific publishing division worth, what is the value of the assets which is recognized? It has been written down to $41 million in the financial statements. So worth $41 million represents how much? The total asset value is also given on the introduction screen. It's $150 million, 41 divided by 150. So it's 27.3 million. Represents 27.3% of total assets. Therefore, material to financial statements. Okay? And one more thing which you can do is that in the question, he has also provided us with the materiality level, which has already been set at $0.5 million. So analysis and evaluation will require you to comment on the materiality level, which was already provided. Okay? revenue, profit before tax, and assets value of scientific publishing division also exceed the predetermined materiality level of $0.5 million. Okay, so 1 mark for commenting on materiality. One materiality level was given in the question. So we referred that also, that okay, it exceeds $0.5 million, and we calculated the percentages also. Let me repeat it again. I hope you all remember that whenever we develop the answer of matters to be considered, we always start with materiality. Scientific Publishing Division generated revenue of $13 million and profit before tax of $1.4 million during the year ended 31st March 2005, which represents 12% of total revenue and 15% of total profit before tax, respectively. So we commented on the materiality because you all know that in case of revenue, we use threshold of 0.5%. And in profit before tax, we use a lower threshold of 5%. Okay. Further, assets recognized in Scientific Publishing Division worth $41 million represents 27.3% of total assets. In case of assets, the materiality threshold is 1% to 2%, but we use the lower threshold of 1%. Therefore, material to financial statement. Revenue, profit before tax, and assets of Scientific Publishing Division also exceed the predetermined materiality level of $0.5 million. So first of all, we have commented on materiality. Now let's move forward. Let's discuss the IFRS 5 rules. Okay. Scientific Publishing Division of Myron Company should be accounted for as per IFRS 5, held for sale and discontinued operations in the financial statements of the year ended 31st March 2005. Okay? At the year end, Scientific Publishing Division meets following requirements for classification as held for sale. Now, what are the requirements? I hope you all remember. Number one, management is committed to sell assets in next 12 months. Okay, as negotiations are in advanced stage at year end, therefore, management's commitment to sale exists. Okay, so you will write each of the requirement of IFRS 5 and you will relate it to the scenario. Active location of buyer is being done. Okay, management of Myron Company is in negotiation with one of the competitor in relation to sale of Scientific Publishing Division. This shows that buyer has been located. Number third, asset is in saleable condition. Okay, so apparently, yes, the asset is in saleable condition because it's a complete cash generating unit. It's a separate unit. It was written clearly here that the division is a separate cash generating unit of Myron Company, so it can be sold separately. Okay, as Scientific Publishing Division is a separate cash generating unit. Therefore, it can be sold separately. Okay, so it is in saleable condition. It is not like that we have to find some replacement assets. Okay. And then it is highly probable that sale will be conducted in next 12 months. Okay. So in case of Myron company, final sale agreement is to be done in few months after year end on in August 20x5. Okay, it was clearly written that the final sale agreement will be done by 1st August 2005. Okay, so if you remember IFRS 5 held for sale, management should be committed to sell the asset. There should be active location of the buyer. Asset is in saleable condition, and it is highly probable that the sale will be conducted. So apparently, the conditions of IFRS 5 which relate to the scenario have been satisfied. Okay, now see, you all know that when we write matters to be considered, we refer to the rules of the accounting standard. And the most important thing is that we have to apply them to the scenario. Okay. As conditions, or you can say considering that conditions of IFRS 5 held for sale are satisfied in relation to scientific publishing division, okay, it needs to be written down to lower off carrying value and selling price less cost to sale. Okay, when we impair it according to IFRS 5, we ignore value in use. Okay, so when the conditions of held for sale are satisfied, we write down the asset to lower off carrying value and the sale price less cost to sell. We stop the depreciation from that date and we classify that group of assets in current assets. So apparently the management has not done these treatments. Okay, now Myron company has written down scientific publishing division assets to their value in use of $41 million. It was written here, if you remember, they have written down the asset from the carrying amount of $45 million to its value in use of $41 million on the year. Now that is wrong. We shouldn't have written down it to $41 million. Rather, it should be written down to sale proceed less cost of disposal to $42 million. And one important thing, even if IFRS 5 is not applied, listen to me, even if IFRS 5 is not applied, then also the impairment they have booked is wrong as per IS 36. Because as per IS 36 also, the recoverable amount is higher of two things: value in use and selling price less cost to sell. When selling price less cost to sell was greater, the asset shouldn't be written down to its value in use. So as per IS 36 also, they have booked wrong impairment. Okay. So, Myron company has written down scientific publishing division assets to their value in use of $41 million on year end of 31st March 2005. Okay, it is wrong. It is wrong, as impairment should be till selling price less cost to sell, which is 42 million dollars. See, selling price less cost to sell was $42 million. Sale price after cost of disposal will be $42 million. Okay, carrying value before impairment was $45 million. See, it is written here that the carrying amount was originally $45 million and they've written down it to $41 million, which is wrong. They should have written down it to just 42 million. Okay. Management has booked extra impairment of $1 million as impairment should be booked till $42 million rather than $41 million. Okay, so we have identified the mistake. Extra impairment booked has understated profits and assets of scientific publishing division by $1 million. Okay, so you have to explain the impact also. This misstatement of $1 million is material to financial statements as it exceeds the materiality level, of $0.5 million, which was given in the question. Okay, so if you look at my answer, believe me, we are just answering in a normal manner like we used to answer in matters to consider. So what about the professional skills? See, I have told you multiple times that professional skills is not a separate requirement for which you have to worry. Just make sure that when you develop the answer, you make good application, you explain the rules well, okay? Your answer should demonstrate the dates, values well. You make good judgments. That's all. Like, for example, when you're calculating materiality, we commented on all the values. We referred the materiality level given in the question. Then we commented on the conditions of IFRS 5. We explained each of the condition. We applied them to the scenario. Okay. Then we commented on the management's wrong impairment. Okay. We commented on the heads affected, the materiality. Okay. That's all which is expected from the student so that they can also get the marks of professional skills. Now, if we go further, Myron company should stop depreciation on scientific publishing division assets once they meet criteria of held for sale assets. Okay, the depreciation should stop. Now, what do you think? Take a judgment. Just take a judgment. Now, this is your professional skill. Whether management has stopped the depreciation or not. In my opinion, they haven't stopped depreciation because in the opinion of finance director, this transaction is of next year. And secondly, they impaired it till value in use only. So in their opinion, the assets are still in use. Okay, in their opinion, the assets are still in use. And it is also written here that none of the assets of the division are held under revaluation policy and depreciation is charged on straight line basis over the useful life. Okay. Management of Myron company has not stopped depreciation on scientific publishing division assets as in opinion of finance director, this transaction is of next year, is of next year as it will happen on 1st August 2005. Okay. Further, they have also impaired assets to their value in use, which indicates their current assumption of continuing use of assets. Okay, this is a wrong treatment. This is a wrong treatment as once conditions of IFRS 5 have been satisfied, depreciation charge should stop even if assets are being used. Even if you are using the assets, the depreciation charge should stop from the date you meet the conditions of IFRS 5 held for sale. Okay? Excess depreciation charged will understate assets and profit before tax of Myron company. Okay. If you want, you can merge this impact with the above paragraph also, because the values are not given, so you cannot comment on materiality. So see, what you need to understand is that you have to answer in a normal manner. Just what you are doing is that you are trying and explaining in a more detail. You are trying to apply it more. But this is one of the things to always try and make sure. Okay, so we have commented on materiality for 1 mark. We commented on conditions of IFRS 5 held for sale. We consider this entire paragraph for 1 mark because we consider every matter for 1 mark. Then we commented on the impairment charge. We commented on the heads affected. We commented on depreciation charge. So 1 mark, then 2 marks, then 3rd mark for the impairment, then 4th mark for the impact, 5th mark for depreciation. Okay, now you can also comment on discontinued operations because this scientific publishing division was a separate line of business. Okay, scientific publishing division was or is a separate line of business for Myron company. Okay, as per IFRS 5, held for sale and discontinued operations, Myron company should disclose profit generated by scientific publishing division separately in its income statement. Okay, in its income statement. This will enable users of financial statement to identify impact of this potential sale of division. Okay, since it is a separate line of business, so as per IFRS 5, held for sale and discontinued operation, it should be shown as a separate line item also. Okay, now finance director of Myron company has not disclosed planned disposal of scientific publishing division. As finance director of Myron company has not disclosed planned disposal of scientific publishing division, nor has adjusted values in relation to it. Okay, this treatment is wrong and it will misstate disclosure notes also, along with misstatement in profits and assets. We have already identified the misstatements which can happen in profits and assets. The opinion of finance director, or you can say basis of finance director, that as this transaction, that as planned disposal will happen in next year, therefore no adjustment is required, is wrong, as IFRS 5 held for sale and discontinued operation becomes applicable even if actual sale has not happened at year-end. Okay? In fact, it applies when the actual sale will happen in the next year. Okay? So, if you look at the matters to be considered, see, I graph the answer with you people. It's very easy for me that I open the examiner answer and I just read that. but I draft the answer with you people so that you people can have a confidence that, okay, we can also do it. We draft it like an exam situation. We think and we draft, we think and we write, so that you people can understand that how you have to deal with it in the examination. So if you look at the matters to be considered, we first commented on the materiality. We always do in matters to be considered. Then we commented on the conditions of IFRS 5 because matters to be considered normally involve conditions relating to accounting standard. Then we commented on the treatment that, okay, the impairment charge book is wrong. Okay. Then we commented on the heads affected due to wrong impairment. We commented on the depreciation thing because it was clearly referred in the question that they are charging depreciation on straight line basis. We commented on the disclosure of discontinued operation. Then we commented that the finance director's approach, his judgment is wrong. Okay, so if you remember, this requirement was 10 marks. We are just done with matters to be considered. So 1 mark for materiality, then conditions of IFRS 5, 2nd mark, 3rd mark for the impairment, 4th mark for the impact, 5th mark for comment on depreciation, 6th mark for discontinued operation, 7th mark or for the comment on finance director's approach. Okay, now what else he's asking? And recommend the further actions necessary before the audit report can be signed. So what are the further actions which you will do? Further actions required. So what are the further actions which you will do? Now, as I identified earlier also, that it is the finalization phase. The audit report is due to be signed. So what are the further actions we will do? We will ask the management to do the required adjustments. The required adjustment include to adjust the value of the impairment, to adjust the value of the depreciation, to give disclosure of discontinued operations. We will ask the management to do the required adjustments. And if they will not do the required adjustment, we will communicate with those charged with governance. And we will tell them about the impact on the auditor's opinion. And still, if they will not agree, then we will take a written representation from them that, okay, we told them, but they didn't agree for it. So later on, when a modified opinion is expressed, they don't argue or confront with us. Okay? Auditor or our firm will communicate or will discuss with management of Myron company to record relevant adjustment relating to over impairment being charged on assets of scientific publishing division. Okay, scientific publishing division. Okay, assets value need to be increased by $1 million and impairment expense booked needs to be reversed by $1 million. Okay, so these are the further actions. Now, please, one very important thing, please note here. Some students write audit procedures. See, don't write audit procedure. The audit is in finalization. You are not doing audit currently. You are just about to issue audit report. So you will ask the management to do the relevant adjustments. Okay. Further, management will be asked to give relevant disclosures of held for sale and discontinued operations in relation to scientific publishing division. Okay, profits of scientific publishing division should be reflected separately on income statement of Myron company. Okay, so we will ask them to do these adjustments. If management of Myron company will not agree to do relevant adjustments we will discuss with those charged with governance of Myron company and convince them for required adjustment. Auditor will also communicate relevant impact on audit opinion if adjustments are not made. Okay, so these are the further actions which we take. You can also write one more action that we will take a management representation letter. If they don't agree to make the adjustments, in that they will write that, okay, the auditor warned us. Despite of that, we didn't make the adjustment and the auditor is modifying the opinion and we are okay with it. Okay, because later on the management will argue that, okay, you didn't warn us. So they have to write in the wrap letter that we gave them the relevant warnings. Now, if you look at the requirements, see, what you need to understand is that your requirement is of 10 marks. For everything you write, you are getting 1 mark for every matter, for every action. So you all know that in auditing questions, normally greater marks are available in the marking scheme. So the point is that if you miss few points also, then also you can get complete score. Like if you look till here, how many marks we have done? First mark was for materiality. Then second mark on condition of held for sale. Then third mark was gained on the impairment treatment. Fourth mark was on impact. Fifth mark was on depreciation adjustment. Sixth mark was on discontinued operation disclosure. Seventh mark was on the finance director's argument. Then further actions, management to adjust it, 8th mark. Disclosure thing, 9th mark. 10th mark to communicate with those charged with governance. So apparently we are done with 10 marks. We can write one more action also that we'll take the management representation letter in relation to it. But if you look at the requirements, we still have one thing that we have to evaluate the implication on the auditor report. So obviously I will not miss out the complete second part, even though my marks are completed. I will write 2-3 points on auditor report also because it was asked to me separately. If I will miss it, then it will give a wrong impression on the examiner. So I will skip one action and then I will move towards implications for auditor's report. Okay. Now, I will skip an action and I will move forward. Even if you miss out few actions, then for implications for auditor report also, you will get 1 mark for each of the implications. Okay. Misstatement in relation to extra impairment charged. Misstatement in relation to extra impairment charged on scientific publishing division assets of $1 million is material but not pervasive to financial statements of Myron company. Okay, we have already commented here that it was exceeding the materiality level. If you remember, we commented here that the extra impairment booked of $1 million. Because if you look at the exhibit 1, the carrying value was $45 million and they have impaired it to $41 million value in use. Whereas sale price after cost of disposal is $42 million. So it should be impaired to 42 rather than 41. Okay. So extra impairment charge is material but not pervasive. Auditor will express qualified audit opinion if management will not do the required adjustment. Okay, so this will be the impact on the auditor opinion. Further, there is misstatement in relation to disclosure also. Auditor also needs to consider that if misstatements in relation to lack of disclosure, in relation to lack of disclosures of discontinued operations, auditor also needs to consider that if misstatement in relation to lack of disclosures of discontinued operations make misstatement in financial statements pervasive, then audit opinion may become adverse opinion also. See, I will repeat it again. The numerical misstatement is of $1 million, but there is a misstatement relating to lack of disclosures also. Okay, so if in the auditor's opinion, auditor also needs to consider that if misstatement in relation to lack of disclosures of discontinued operations make misstatements in financial statement pervasive. See now, what is pervasiveness? Pervasiveness is a subjective thing. Pervasiveness is a level where the auditor says that, okay, the financial statement is becoming meaningless. It is getting distorted. And maybe the auditor form an opinion that, okay, scientific publishing division is one of the major division of the business. Okay. And if the management is not making the relevant disclosures and the financial statement is becoming misleading, then the auditor have the right to give an adverse opinion also. Now, many students ask me that, sir, is there a criteria of pervasiveness? See, as per the auditing standards, there is no defined criteria of pervasiveness. You need to understand. It is the auditor's judgment to determine a level that where he thinks that, okay, the financial statement is becoming meaningless. Okay, so the auditing standard keep it on the judgment of the auditor. But normally in our examination, we consider that if something is creating misstatement of like 40-50%, we think that, okay, it is becoming pervasive. Okay, but since it is an issue relating to disclosure, so we cannot quantify this thing. We will leave it on the discretion of the auditor that, okay, if the auditor takes this judgment, okay, it is very important to highlight that it will be on the auditor's judgment that if he thinks that if the misstatement is pervasive, then he can go for adverse opinion also. If the audit opinion becomes qualified or adverse, then auditor will change headings of opinion paragraph and basis of opinion paragraph to qualified opinion and basis of qualified opinion or adverse opinion and basis of adverse opinion. So this is the impact on the financial statement. And obviously, this is your professional skill that you evaluate all the possibilities. That, okay, with the numerical aspect, it is just material. But from the disclosure aspect, obviously, it's a big thing that they are not giving a disclosure of one of the business segment they are seizing. So we have said that it will be the auditor's judgment. Okay, auditor also needs to consider that if misstatement in relation to lack of disclosure of discontinued operation makes misstatement in financial statement pervasive, then auditor opinion may become adverse also. But pervasiveness is the auditor's judgment. Okay, so what is your opinion at this point? Obviously, I will say that the scientific publishing division, if you look at the percentages also which we calculated, it was like 12% of the revenue, 15% of the PBT, 27% of the asset. So normally at this level, we don't go for adverse opinion. But from the evaluation perspective in professional skills, it is very important that you identify the possibility that, okay, this can happen. Okay. So if you look at this requirement, I believe that this was an easy one. It was a 10 marks requirement. Comment on the completion matters to be considered in relation to the issue described and recommend the further actions. Evaluate the implication for auditors. So we have written a plenty in this answer that, first of all, we commented on the materiality. We calculated our percentages and we also referred the materiality given in the question. We referred the rules of IFRS 5. See, the examiner has stated that when you write the rules of the accounting standard, that also gains you mark for analysis because it is your analysis skills that you are analyzing the rules. Okay. Then we refer that, okay, that over-payment was charged. We refer to the scenario. We made a judgment that, okay, the profits and assets are understated. Okay. Be specific that, okay, assets of scientific publishing division are getting affected. Then we commented on the depreciation charge thing. Okay. Then we commented on the discontinued operation thing. We commented on the finance director's argument. Then we referred further actions that, okay, we asked management to do these adjustments. Please make sure that don't write procedures. We asked for further actions and it is completion stage. Okay, then we wrote implications for auditable. So apparently the answer which we have drafted is of more than 10 marks. Okay, we went in much more detailed matters to be considered. So if someone skipped few matters also, then also he can get complete 10 marks. Because like for each action, you get 1 mark. For each implication for audit report, you get 1 mark. Okay, I hope that you are understanding. See, in my opinion, the advanced auditing and assurance paper is very easy. If you are good on accounting standard, you read the question carefully, you be relaxed, and you draft the answer. It's an easy one. Okay. I also teach advanced taxation. So I always say that advanced taxation questions are very difficult as compared to triple A. So in that, you have to get involved, and there are so many rules. But when we talk about triple A, it's easy. It's easy. But the most important thing is that you should be good on accounting standard and you should have an ability to read the scenario. Okay. Now let's move towards part B, which is relating to Exhibit 2. Using information contained in Exhibit 2, describe the auditor's responsibility in relation to other information presented with the financial statement and evaluate the matters arising from the extract from the chairman's statement. Now, this is a separate requirement of 5 marks. And then, assuming that no changes are made to the chairman's statement, evaluate the implication for completion of the audit. That is a separate 5 marks requirement. So we will attempt them separately. This is also an easy one. I hope that you all remember that for other information, the auditor do not express any opinion. He just makes sure that the information is consistent with the financial statement. So first, we have to comment on the auditor's responsibility in relation to other information. Okay. First, we have to comment on the auditor's responsibility in relation to other information. I've told you earlier also that in question number 2 and 3, it is not necessary to give headings and subheadings because there are no marks for communication professional skill. But if you give headings, that is good. Okay. And so first we have to describe the auditor responsibility in relation to other information presented with audited financial statement and evaluate the matters arising from the extract from the chairman's statement. So let's look at the auditor's responsibility in relation to other information. Now, when we talk about the auditor's responsibility in relation to other information, you all know that auditor do not expresses any opinion on other information. Okay. Other information means other information which is part of annual report, but not included in the financial statement. See, the annual report is a big document that includes director report, chairman's statement, other analysis. Okay. And within that annual report, the financial statements are also included. The auditor's opinion is on the financial statement, not on the other information. Okay. But for other information, auditor reviews them to make sure that they are consistent with the financial statements. And the purpose of reviewing its consistency is to make sure that there is no conflicting information included in the annual report document. And if there is any inconsistency in other information, he evaluates it, he explores it, that whether it's a misstatement in other information, whether it's a misstatement in financial statement. Okay. If there is a misstatement in financial statement, it will create impact on audit opinion. If there is a misstatement in other information, it will not create an impact on the audit opinion. Rather, the auditor will highlight this issue in other information paragraph of auditor's report. So first of all, describe the auditor's responsibility in relation to other information presented with the audited financial statement. Okay. Auditor's opinion is not on other information, presented with the financial statements. Okay. Auditors are directly responsible for financial statements only. Auditor's opinion is not on other information presented with financial statement. Auditor's opinion is on financial statements of company only. Okay. In relation to other information, presented with the financial statements, auditor has to make sure that this other information is consistent with the financial statements. Okay, so auditor only makes sure that this other information is consistent with the FS. If there is any misstatement in other information, it will not affect the auditor's opinion. Okay, if there is any misstatement, it will not affect the auditor's opinion. Auditor will only highlight that inconsistency in the other information paragraph of audit report, so that that inconsistency don't confuse the users of the financial statement. Okay, so auditor's opinion is not on other information presented with the financial statement. Auditor's opinion is on the financial statement of company. In relation to other information presented with financial statement, auditor has to make sure that this other information is consistent with financial statement. Okay, if any material inconsistency exists in other information, then auditor has to evaluate it, that whether that material inconsistency is due to misstatement in financial statements or due to misstatement in other information presented with financial statements. Okay. Please understand. See, I believe that it's nothing difficult. It's very basic thing, that what are the auditor's responsibility in relation to other information. And you study all of this when you study the topic of auditor's report. If misstatement is in financial statements, then it can affect auditor's opinion if it is material to financial statements. However, if misstatement is in other information paragraph, then auditor's opinion will remain unaffected. Auditor will highlight misstatement in other information paragraph of audit report, so that misstatements in other information do not confuse users of financial statement. Okay, see, I will repeat it again. I want you all to concentrate on it. First of all, we have to describe the auditor's responsibility in relation to other information presented with audited financial statement. So this was a general requirement. So we said that auditor's opinion is not on other information presented with financial statement. Auditor's opinion is on financial statement of company only. In relation to other information presented with financial statement, auditor has to make sure that this other information is consistent with financial statement. Okay, auditor only makes sure that there is consistency. If any material inconsistency exists in other information, then auditor has to evaluate it, that whether material inconsistency is due to misstatement in FS or due to misstatement in other information. If misstatement is in FS, then it will affect auditor's opinion. But if it is a misstatement in other information, the other information means like chairman's statement, the director's report. See, what you need to understand is that annual report is a big document. That document includes chairman's statement, director's OP report, and everything. And it also includes financial statement. The auditor's opinion is only on the financial statement, not on other miscellaneous and etc. information. Okay, now, and evaluate the matters arising from the extract from the chairman's statement. Chairman's statement of Myron Company is part of other information presented with the audited financial statements of Myron Company. Okay, so the chairman's statement on which we are talking is the other information. Okay, now let's go and read this chairman's statement and comment on it. Okay, see, I believe that the paper, this question is very easy. It was a very straightforward question, and those students who are good on matters to consider audit report topics, it was not a difficult one. Okay, now let's move forward. As part of your review, Myron Company, you have also been presented with the extract from the draft chairman's statement, which will be published in the annual report along with the financial statements for the year. Now, extract from the chairman's statement. The company results for the year are extremely positive. Our year-on-year revenue growth is 5.9% and profit growth is even stronger at 13.4%. So first, let's check that whether this revenue growth and profit growth given in the chairman's statement is right or wrong. So if you look at the revenue, it was $108 million in current year, and previous year it was $102 million. So 102 minus 108, it's 6 million divided by 102 million. So it's 5.8% growth, 5.88, which is right. It's 5.9% growth. And profit growth is even stronger at 13.4%. So 9.3 and 8.2 million. So 9.3 minus 8.2 divided by 8.2. So yes, it is also 13.4%. So the values, the numbers given in the chairman's statement are correct. All our revenue streams have performed well, specifically the scientific publishing division. We are looking forward to exciting and sustained growth levels again next year. Now, this is one of the things on which you can make an argument that the chairman's statement is creating a misleading impact because the company is selling the scientific publishing division. And when they are selling the scientific publishing division, the growth will not be sustained. Because if you look at the growth, see, the total growth is 102 to 108. Okay. Now, in this, other divisions have increased from 93 to 95. The scientific publishing division has increased from 9 to 13. So the major contributor in growth was scientific publishing division, not the other divisions. So if the scientific publishing division will be removed, the growth impact will reduce. Similarly, if you look at the profit of other divisions increased from 7.5 to 7.9 million in current year. It is just a growth of 0.4 million. But for scientific division, it was 0.7 million in last year, and in current year, it's 1.4 million. So 100% growth in scientific publishing division profits. So the comment that the growth will be sustained is a misleading thing. Okay, so let's start developing the points. Okay, now we are talking about evaluate the matters arising from the extract of the chairman's statement. Now, matters arising from the extract of the chairman statement. Okay. Again, I will say that giving headings in question number 2 and 3 is not necessary because there are no marks of communication. If you give headings, it's good. But if you don't give, then also it is acceptable. Okay. Now, growth percentages given in extract from the chairman's statement are correct. Okay. Revenue of Myron Company has increased from how much? Has increased from 102 million to 108 million dollars, which is 5.9% growth. Okay. Revenue of Myron Company has increased from $102 million to $108 million in the year ended 31st March 2005. This reflects growth of how much? 5.9%, which is as shown in it. 6 divided by 102 million, because 6 million is the growth, divided by 102 million of the previous year. So it's 5.88%. We round it off, so it's 5.9%. This reflects growth of 5.9%, same as stated in extract from the chairman statement. Okay. Further, growth of profit before tax stated of how much? Of how much? Of 13.4% is also correct. Of 13.4% is also correct, as profit before tax has increased from 8.2 million to 9.3 million. So 8.2 minus 9.3, it's 1.1 million, divided by 8.2 million. So it's 13.4%. As profit before tax has increased from $8.2 million to $9.3 million in the year ended 31st March 2005. So it is very important if you calculate it and you comment that, okay, this thing is reported correct. Now, moving forward, the chairman has stated that they are looking forward for sustained growth levels in the next year. Now, on this, you can argue because the growth was majorly contributed due to scientific publishing division. And the scientific publishing division is to be sold, and the negotiations to sell it are underway. Okay. Now, however, a misleading impression is created in chairman's statement that growth of Myron company will be sustained in next year also. Okay. Myron company's growth was majorly contributed due to growth in scientific publishing division, which they are selling in next year. Okay. So it is creating a misleading impact. Okay. So if you want, you can use numericals also. Growth in revenue of how much? Your revenue has grown by from 102 million to 108 million. $6 million was the growth. And from that $6 million, $4 million were contributed by scientific publishing division, because scientific publishing division revenue increased from 9 to 13. Growth in revenue of Myron company was $6 million, from which scientific publishing division contributed $4 million. Okay, because if you look at the numbers, it is very important that you use the numbers. The revenue in previous year was 102. In current year, it's $108 million. So the growth is 6 million, but the scientific publishing division has increased from 9 to 13, which is a contribution of $4 million. Similarly, if you look at profit before tax, it has increased from 8.2 to 9.3 million, which is a growth of $1.1 million. And in that also, scientific publishing division has contributed $0.7 million. Okay. Similarly, growth in profit before tax of $1.1 million is also majorly contributed from scientific publishing division, as it contributed $0.7 million in growth of profit before tax. Okay, so we are commenting on the matters arising from the extract of the chairman's statement. First of all, we discussed the auditor's responsibility. Okay, so we wrote 2 paragraphs on auditor's responsibility that will give us 2 marks. First of all, we commented that, okay, auditor don't affect the opinion due to other information. And then we said that if there is material inconsistency, how auditor deal with it. Then we are commenting on the facts which are disclosing in the chairman's statement, that the numbers are given right, but a misleading impression is given relating to future growth. Now, if you look further, As you can see from our auditor's report, the auditor agreed that our results are strong and the sound basis for taking the company to even greater places next year. This is also a false claim. Okay? Another false statement, or you can say another misleading statement, which needs to be considered is in relation to auditors, that they agree that Myron company has, if you do read the exact word, results are strong and have a sound basis for taking the company to next level. Now, auditor audits the past year. Auditor do not comment on future. That Myron company results are strong and sound basis exist for taking the company to next levels in future. This is a wrong statement, as auditor's report is on financial statements of the year ended 31st March 20x5. Okay, auditor has not expressed any opinion on strength of company's results and its future perspective. Okay, it is not the work of audit firm while doing audit of financial statement to comment on the future perspective. Okay, and we haven't not, and even we have don't commented anything on that. Okay. And the last thing, if you remember in the chairman's statement, because we have read this paragraph also, we have also made significant progress with our social and environmental aims of reducing our carbon footprint and encouraging reuse and recycling across our division. We are proud to announce that we have moved all our printed products to our recycled product. And if you remember, the audit supervisor has identified that at least 3 publications of Myron company are not on recycled paper. Okay, so lastly, claim made in extract from chairman's statement that all of the publications of Myron company are now on recycled paper is also wrong. Okay, because as highlighted by audit supervisor, at least 3 of the Myron company publications are still not on recycled paper. Okay, so if you look at the answer, believe me, what I particularly think is that when you talk about the answers of advanced audit and assurance, it is just about reading the scenario carefully. And I always say to my students that when you deal with the AAA paper, it is more about your confidence and your approach to deal with the paper. Okay, obviously your technical knowledge supports you, but still your confidence and your approach will contribute a lot towards your passing the exam. So describe the auditor's responsibilities. So we identified that, okay, the auditor's responsibility in relation to other information is not to express an opinion. He just makes sure that there is no material inconsistency. And then we said that how auditor deals with inconsistency. As far as matters related to the chairman's statement are considered, we commented that the numericals are right, but the chairman has created a misleading impact about growth. He made a false claim about the auditor's approach, that auditor supports our strong growth. And lastly, the statement about the publication is also wrong. So believe me, this was an easy requirement of 5 marks. Okay, if you remember, it was a 5 marks requirement. And if we consider 1 mark for each of the requirement, we have written extra. We wrote 2 paragraphs in relation to the auditor's responsibility. So you can consider 2 marks for it. Then we commented 4 things on the chairman's statement. So if you consider 4 marks, we have written extra. So if you write extra points, then in case if any one of your point is not included in marking scheme, or if it do not satisfy the examiner can still give you mark for the extra comments which you wrote. Okay, now let's move towards the last part, which is assuming that no changes are made assuming that no changes are made to the chairman's statement, evaluate the implications for the completion of the audit and the auditor's report, 5 months. So if the management will not adjust the chairman's statement, then what will be the implications for the auditor? So here you need to make sure that obviously auditor will not take impact on the auditor's opinion, but he will refer these issues in the other information paragraph, which is included in the auditor's report, that there is material inconsistency and there are misstatements in the other information. The purpose of highlighting these issues in the other information paragraph is that it do not confuse the users of the financial statement. Okay, so now let's draft this answer. It's the last 5 marks requirement. So, assuming no changes are made to the chairman's statement, evaluate the implications for the completion of the audit and the auditor's report. So, let's break this requirement into 2 heads. One is implications for the completion of the audit, and other is implications for the completion of audit for the audit report. Okay. Let me repeat it again. If you read the requirement clearly, he asked us 2 things. Again, giving subheadings is not necessary. If you give, it's good. If you don't give, then also it is acceptable. So assuming that no changes are made to the chairman's statement, evaluate the implications for the completion of the audit. Now, implications for the completion of the audit means that what will be the steps or what will be the impact on the completion phase, and what are the implications for the auditor report. Now, as far as the implications for completion of audit is concerned, there are 3 issues. One is about that sustained growth issue of the scientific publishing division. Okay. Second is wrong statement made about the auditors. And then last one is about that recycled paper. So what will be the implications for completion of the audit? So for completion of the audit, what auditor will do is that first of all, auditor will further investigate it and he will discuss with the management that what are the basis of making these claims in the chairman's statement. And he will convince them that, okay, you should make the relevant corrections. If they don't make the relevant corrections, then we'll discuss with those charged with governance, okay, that please make the relevant corrections. And if they don't make the relevant corrections, we will inform them about the impact on the auditor's report, that we have to highlight this issue in the other information paragraph. And if those charged with governance is not agreeing to do this, it also creates a concern on integrity of the client, that why they are willing to make false claims. Okay, so auditor should further investigate the misstatements, misstatements in chairman's statement, Okay, he should further investigate them to find out that whether there is any justification. Auditor should further investigate misstatement in chairman's statement. It should be discussed with management that what are the basis of, I would say, wrong claims and misleading information included in chairman's statement. Okay, because there are 2 wrong claims. One wrong claim is relating to recycled paper. Another wrong claim is about auditor's approach, and then misleading information relating to sustained growth. Okay, wrong claims include claim about auditors' opinion on strong growth of Myron company, and secondly, in relation to recycled paper for all publications. Okay, misleading claim is in relation to sustained growth of Myron company in next years. Okay, so what are the implications for completion of the audit? So auditor will investigate these misstatements first. Then auditor will ask management to revise chairman's statement and remove the wrong claims made and remove the wrong claims made in relation to auditor and recycled paper issue. Okay. Further, information relating to sale of scientific publishing division should be added in chairman's statement so that misleading information or misleading impression relating to growth is not created. Okay, so first of all, we will investigate it further. Then we will ask the management to adjust it. If management will not agree to make the required adjustments, then auditor will discuss. I think that these are routine things. Then auditor will discuss these issues with those charged with governance of Myron company. Okay, auditor will communicate them about impact of these issues on auditor's report. Okay, so then you will talk with those charged with governance. Lastly, auditor will also consider impact on integrity of Myron company if they insist or if they persist on making false and misleading claims in chairman's statement. Okay, because obviously it is an issue if the client is insisting on making false, because these are something which are absolute things. Why are you insisting on making false claim? So obviously it will create a concern on integrity also. Okay, concerns on integrity may lead to auditors withdrawal from Myron company engagement also. Okay, so first of all, the first thing was asked was evaluate the implications for completion of the audit. So whenever there are issues in other information, we always investigate them further. Okay, then we ask the management to adjust them. We'll talk with those charged with governance, and if they are making a false claim relating to something which is very much absolute, so we will consider the impact on integrity also. As far as auditor's report is concerned, okay, misstatements and misleading claims made in chairman's statement will not affect auditor's opinion. Okay, will not affect auditor's opinion because we have already discussed that also, because it's a misstatement in other information. However, auditor will refer this issue in other information paragraph of auditor's report so that the users don't get confused. Misstatements and misleading claims made in chairman's statement will not affect auditor's opinion, as audit opinion is on financial statements only. However, auditor will highlight these misstatements in other information paragraph of audit report, so that users of financial statement do not get confused due to misstatements in chairman statement. Okay, so this will be the implication for auditor report. It will not affect the auditor's opinion. So this part 2 was also of 5 marks. Okay, so if you look at my answer, there were implications for completion of the audit, again 1 mark per point. So first one was we'll investigate it further. Then second was that auditor will discuss with the management to adjust it, to remove those things. Third was that we'll discuss with those charged with governance. We'll think on the integrity of the client. And the last one was that it will not affect the audit opinion. It will just be referred in other information paragraph. Okay. If you want to add more, I'm not adding because my 5 marks are completed. You can explore more about other information paragraph. That in other information paragraph, auditor will write that other information is not the responsibility of auditor. It is the responsibility of the management, and auditor will highlight these inconsistencies so that the users will not get confused. So you can talk about the contents of other information paragraph also. And you can also talk about the placement of other information paragraph also. Because when there are misstatements in another information paragraph, when there are misstatements in other information paragraph, you write this paragraph before CAM. Normally, the other information paragraph is written after key audit matter. But when there are misstatements, you move this paragraph above CAM. So these all are the issues which you have already studied during your course. So what you need to understand is, see, if you look at my answer, I haven't done anything new for professional marks, right? In the normal manner as we used to do. But what you need to make sure is that you just analyze in a more better manner. You should be able to make judgments that, okay, here is the thing which is misstated. You should be able to make a call. Okay. And you should have skepticism to question the data. And these all are the things which we already make sure when we deal with the auditing paper. So if you look at this answer, this was an easy question. First of all, from Exhibit 1, we had to talk about matters to consider in relation to IFRS 5. I believe this was an easy one. Then we talked about actions to be taken. Now, it was very important that students shouldn't refer procedures here. It was actions to be taken. And then there were implications for auditor. Then in relation to chairman's statement, first we discussed the auditor's responsibility, then matters specific to the chairman's statement of my own company. And the last one was implications for completion of the audit, that what are the actions which we have to take in completion of the audit and for the audit report. I believe that this is easy. Now, in the next class, we'll do one very important thing, a very important session, in which we will refer a document called as Read the Mind of Marker. In Read the Mind of Marker document, we discuss an answer drafted by a student, which is marked by the examiner. And the examiner tells us that, okay, here I have given these marks. So that document will help you a lot in learning the writing approach. So this document is not issued for all the past papers. It is only issued for this specimen paper. So we discussed this for question 1, question 2, and now we'll also discuss it for the question number 3. That what were the things and what were the areas which the examiner expected. Okay, so for today's class, it's done. We have discussed the complete answer. We drafted the answer together. In the next class, we look at the Read the Mind of the Marker document. Okay, if you have any query, feel free to ask me on my WhatsApp. Thank you, everyone.